Good morning, everybody, and welcome to another edition of MSATP TV. Joining us this morning is Don Hoffman, who's going to be talking about construction accounting. Don owns a practice in the Owensville area, and he'll be talking to us about what's going on, and he'll also be teaching the class on construction accounting. So, Don, why don't you introduce yourself and tell us a little bit about you?
All right, thank you very much, Bill. Appreciate it. So again, my name's Don Hoffman. I've been practicing accounting for many years with a very large focus in construction and manufacturing. We have a very large client base in the construction industry. I have a degree in tax law from the University of Baltimore Law School, and also have a big wealth management division. But the focus today really is about some of the unique opportunities and also pitfalls and challenges that CPAs face when dealing with construction contractors.
Okay. So of the different kinds of construction accounting, is there a preferred method that people use?
Well, let me dive into that. It's a great question, Bill. So we really, first of all, need to segregate things between financial statements and tax returns. And I would tell you, Bill, that most construction clients we pick up, there are significant issues. So before I talk about the tax side of the issues with construction contractors, let's talk about the GAAP issues, because
Okay.
the GAAP issues are very substantial. And so there's two very large users of construction financial statements. And a lot of the rules have changed the last few years on how we report assets and liabilities on financial statements for contractors. And there's always an epicenter for why these rules have changed. And the rules have changed because there have been, over the last, I'd say 10 years, a lot of construction companies that have gone out of business, and some extremely large companies that have gone out of business. And generally speaking, bonding companies are really pretty good at understanding what they're looking at. And bonding companies are the people that are saying to a owner that if the construction company does not complete the job or pay their bills, we are going to go in and pay all the bills, and we're going to complete that construction project. So when a CPA is issuing a financial statement for a contractor and they are getting construction payment and performance bonds, that CPA is taking on a massive potential liability if the financial statements are not done according to all the guidance that is out there. It's a very big issue. And so that we're going to cover in this seminar a lot of the pitfalls and the things that CPAs need to be very careful about. They have got to understand, because the liability, it's not about just issuing a financial statement and they give it to a bonding company. It's when they have an issue and the bonding company has to pay, the first person they're going to look at is the CPA firm to see if they were following all the rules and actually doing their jobs on these reviews and certainly on audits of financial statements. On the tax side of the accounting rules, there are many methods of accounting that can be used for taxes, and we want to cover in this seminar a number of those different types of rules. I certainly want to cover in this seminar the things that we see firms generally are missing when they are doing tax work. It's actually some degree amazing what gets missed, and also I believe there are opportunities where a CPA can really shine with research and development credits that people typically will look at and say, well, our client is not a technology company and they don't even think about research and development credits, but they are a very big issue and available for many, many contractors, and something that gets overlooked that clearly should not be overlooked. So I think there was going to be a lot of good data, in this seminar, where I think the people that attend it are going to learn a lot about the issues to look at regarding issuing financial statements. So they're providing a great end product. They're also going to learn about some of the tax issues that they need to address and R&D opportunities for their clients. So we look forward to having a great seminar where people can learn a lot and be a lot more comfortable when they are approaching doing work for construction companies, because it's one of the more complicated issues out there is construction accounting. When you look at all the other different industries, the rules are diverse. There are many, and there's a lot of risk that CPAs take. So it's a seminar I highly recommend people attending if you choose to do work for construction companies.
Okay. Can you tell us just a little bit about the R&D credit? Because I read your article that you wrote for the Free State Accountant last month, and it was very interesting because it's not something I ever thought of for the construction business. So could you just briefly go into something like that?
Sure. So, for example, you have many, many contractors, Bill, that they are doing design and build work, which means they're actually creating design, they're doing engineering work for companies, when they are coming up with these contracts. And sometimes an engineering work will bring the cost of the project down. A lot of those items that are happening when they are creating a engineering process to build a building, qualify for research and development costs. There's also another opportunity there are energy credits available for redesigning buildings, and it's something else. It's not really the topic of the seminar, but on 179D, there's an issue there, but that we can get opportunities for clients. But the R&D credits, keep in mind, if you're creating something new in your business, and it doesn't need to be something that's new in the world, okay? It's just for your business. And, I was explaining that one of our clients designed a piece of equipment that was a process to more efficiently install cabling in a tunnel. And the design, the building of this piece of equipment to eliminate scaffolding during this construction project. When he talked to us about it, it's like you created something new for your business, and all that effort and time was qualifying for R&D credit. We have so many clients that they even when you look at a construction company, after looking at software issues, and they're developing software to run their businesses better, or to better estimate. There's all these issues that it's like, wait a minute, they are creating something new. And again, it doesn't have to be new in the world, it has to be new for them. And there's lots of opportunities. And it's just one of those things, Bill, that get missed, a lot. And
Right.
It's worth at least being aware that these opportunities exist, and to get the R&D stuff done, because the last thing an accountant wants is someone else to come knock on the door and say that there's this possibility for R&D. And that's a really important issue. And I'll tell you one other small item, just top of mind. These construction companies, they have some of them have a lot of equipment. And another issue we see with contractors, their equipment moves all over the place. It moves to different counties, it moves to different states. Well, most of these clients we pick up, you'll see that the equipment is put on personal property returns in the location that the company's headquarters are in. That may not, that may be a very high personal property tax rate. There's some
Right.
counties, no personal property tax. And that's another area that we constantly see clients overpaying personal property tax, because people aren't thinking about the ability to reflect different jurisdictions or even different states where it's located, where maybe there is no personal property tax. And also the fact that so much of this, you'll see clients that, especially construction companies, that have equipment that they haven't had for years that are still sitting on those returns that need to be removed. And it's
Right.
just things that are overlooked. So there's a lot of unique opportunities, for these companies out there.
Okay. Well, I know I'm looking forward to hearing your seminar. And can you give us, if somebody wants to get in touch with you about a client that they have that potentially could be a referral or something like that for you, how could somebody reach out to you?
The best way to do that is info at, which is info at Hoffman, HOFFMANCPAS.com.
Okay.
And our wonderful marketing manager, Megan, will screen those and follow up with me to get back to people.
All right. Well, very good. And hopefully it'll be successful for you. And I know, like I said, I'm looking forward to hearing your seminar, and I look forward to seeing you again. Thank you very much for joining us today.
All right. And thank you, Bill. And we're just happy to help some of the fellow CPAs and associates out there so they can do a better job for their clients.
All right. Well, thank you very much. Have a good day.
All right. You take care. All right. Bye-bye.
Bye.